All right, welcome traders. So, as you can see, I'm doing something different right now. We're going to do presentations. And the purpose of this series, or how I'm going to move this YouTube channel going forward, is that we're going to focus on different PD arrays. And starting off the month, November, breaker. So throughout this month, the goal is just focus on trades that are used. Pretty much the goal is to focus on trades where the breaker could be implemented, right? So I do believe it's important for us to get familiar with each PD array. So this month's going to be a breaker. The next month's going to be a fair value gap. And the following month, maybe order blocks. After that, run on buy side liquidity or run on old highs and old lows. So I'm going to take my time and focus on each one each month. So that way we get familiar with them, every single month. We get familiar with a different one. So I think it's very important, and I think it will be very beneficial for you and I, right? So let's go ahead and dive into it. We're going to start at the breaker. So there are two types of breakers, a bullish and bearish breaker. And breakers can be seen on every time frame. A bearish breaker is the last down close / bearish candle before a run on buy side liquidity. A bullish breaker is the last up close or bullish candles before a run on sell side liquidity. I'll show some examples here. That's a bearish breaker. And notice how, ignore all these other lines, but focus on this down close candle. So notice how this candle ran lower. And boom. So the whole point is it runs out this buy side liquidity. And what is the last down close candle prior to running out that buy side liquidity? Is this. So when the market trades this area, we could expect it to act as resistance and potentially expect some selling going on. Okay. Now, this is a bullish breaker. So notice how this was the last up close candle before this down movement that took out this liquidity pool. So this up close candle is very essential to, it will play an important role in price. So when price goes back down there, the market will be sensitive at that level. As you can see, market trading there and went higher. So those are the two types of breakers. Now let's go into the charts and see what examples that we had today. All right. So first of all, the goal is I'm going to show different examples, what I took the trade or not, just so we get familiar with it, right? Today I was fortunate enough to take these trades, which I've already posted on my YouTube channel, so you can watch the videos posted today, October 31st, 2022. You'll see the videos, the trades I took today. So today we're also just going to focus on the euro. And I'd like to remind you that I did say how euro was going to start dropping going into this week and Friday, Thursday, last week. So, and it's been doing that so far. I think we will continue to see downside movement on the euro and dollar. I mean, downside on the euro, foreign currencies, and upside movement on the dollar. But that's not what I'm here for today. Today, we're just going to focus on the breakers. So, first of all, I want you to pause your chart. I know you see this level here, but this is on the lower time frame, so this doesn't matter. If you can, pause this video and tell me where you see a breaker here. I'll give you a couple minutes. All right. More likely than pause, but it's okay. So, first of all, we're not going to throw out other elements that matter. Just because we're focused on breakers does not mean we take any breakers. Remember, the first element when it comes to understanding price charts is time. So it depends on what time does the market get to these levels. That plays an essential role on whether we will facilitate a trade or not. So if you notice, this is in London session. I have it clearly highlighted here. There's a 15-minute chart, and you can clearly see you can use here as a breaker. All right. And I'll just delete this level. This level is not important right now. So this was a breaker. Why was that level a breaker? Well, if you notice, this is the last down close candle before it ran higher, taking out buy side liquidity. So that was a breaker, which you could use for an entry right there for a sell. And I was able to trade based off this. This was my trade today that I was taking today was based off of this deal right here. So market got in here, took a trade lower, and got out at the lows around here around 5 a.m. Okay, the market trades higher. Now, where is the break? Is there any breaker here? Even though this is outside of the session, you know, but if you look closely, this is a breaker as well. It's the last down close candle. So why this breaker, right? Well, this is the last down close candle before all of this movement. So that's why I would definitely consider here a breaker. Now, as market slowly breaking down, this is the breaker I look at first. And this is, of course, the way I look at price myself, right? Learned most of my trading from ICT, but, you know, this is how I look at price, how I've seen some success, and how easy it's been for me to see the market now. So when it's breaking down, the first breaker seen is this one. Right, this was the first breaker seen, this down close candle. Then when we go below here, now this candle becomes a breaker too. It's of interest as well. And notice how, of course, in here you could have taken the trade based off this candle, but I use this one personally. But notice how when we came back in here, what do? The market hit this level, and look at how the rejection, boom. Now, mind you, I didn't take this trade because of the time of the day. So just showing you that just because. So that's the only break I see on this time frame. Let's go to the 5 minute. So on the 5 minute time frame, what do we have? So notice this was that 15-minute breaker. All right. And I'm just going to get this out of the way. I just want to focus on the 5 minute time frame now. Now, let me know if you see any breaker here. Just focus on London session a little bit. Okay. Well, I'm going to go ahead and draw it out. And actually speaking, there's not really one in London session that I like. I was going to go, let's see if it broke below here first. It didn't break below. Okay. It didn't break below. I was trying to see if if the market broke below this level first, and retraded here. These candles would have been my breaker, but that's not what happened. So it's okay. But notice how when it did trade below, look at how that played out. Now, mind you, I wouldn't take this trade personally because it's 6 a.m. time of the day. I wouldn't take it. It's outside of my, what I like to trade. Now, if you look on 5 minute time frame again, what do we have here? There's a breaker for me. What I consider a breaker, if you look very closely, We ran out this swing point right here. What makes a swing point? Look at your first three fingers, all right? It's like your middle finger is the tallest one. The other two on the side, is lower than it. So same thing with a swing point on these candle charts. You have this candle's high, which is lower than this one. So this would be like your middle finger, right? And then this one's lower. So this makes this a swing point. So when market trades above that and then breaks back down lower, I consider this level a breaker. This whole candle is a breaker for me. And market was so close to it, but what was in near proximity? A fair value gap. So at this point, yes, I see the breaker, which gave me confirmation. I would have rather traded the market when it goes back in here, but there's also a fair value gap. So instead of waiting for that to get hit, I'm still using the same idea. I see a breaker. That's why I'm even looking to go short. So it came very close to it, but failed, and then we dropped. And this blue line is a 4-hour order block, which I used to get out the trade. And that was that. Let me see if on the lower time frame if we can see anything here. That also makes sense. Let's just do this. Because I might have also been trading on lower time frame. Well, once market traded below this candle's low, all these down close candles. So notice I said initially we only focus on last down close candle for the move, but if they're consecutive candles, because if this is a 3-minute chart, guess what? This would be one candle. So this whole range in here will become a breaker. I like the bodies. You could also use the wicks. That's up to you. I like to use the bodies a lot of times. So once we did trade below this candle's low, now I'm looking at what's happening within this range. And you could have facilitated a trade based off of that. If you're uncomfortable, when the market came out at this level, gave you an ultimate trade entry, it just gave you a clear swing and then retracement. It's a fair value gap. That could also be an entry to take the market lower. So those are the breakers that were present in the chart today. That's what I saw today. Nothing else, nothing more. So I hope that was helpful. Now going forward, like I said, my goal is every day, whether I took a trade or not, on it, and I'll show the trades. Even though I told you, if you can go check my last 2 videos I dropped on YouTube, very short videos, less than 2 minutes a piece. I'll show the trade I took. But going forward, I'll be focused probably more on Euro and S&P. The goal is to show examples on these breakers for the rest of the month. That way, we get more familiar with it. That way, you understand how I use it and different ways you can potentially implement it in your strategy if you want to, of course, do that. And let's see right here. Show executions and labels. I guess you can do that. That's a lot. I had to fire off a lot of trades on this candle. That was that, remember, the breaker right here. A lot of trades I fired off there because it's only letting me get in about I had 500K, or I guess you call it 5 lots, I believe. So I was firing off sell. I literally ended up buying a little bit back here just because I think I over leveraged, something like that. Or I don't know why I bought here. I can't tell you why. Maybe I was cutting my position just to make sure I didn't want to over leverage, right? But notice how I took out all my trades for the most part here. I was out of the market here at the lows. Why? Because it's already 5 a.m. Did it keep falling? Yes. But look at that retracement. Did I want to hold on to that retracement? No. Right? Then what did I do during New York session? Same trade. 5-minute time frame. All those cells around that candle. Boom, boom, boom. Got out some here. Got out here. And got out there. So that's the business for today. We'll see what tomorrow brings us. I hope that was helpful. I hope. Let me know if, of course, you want me to continue with this type of series where I focus on one PD area, which is the breaker. So this month is going to be the breaker. So drop a comment, follow the page. I'll really appreciate it. Subscribe, man. I really appreciate it. You subscribe and you like and motivate me to keep going harder and do more videos. So I want to thank you for watching. Thank you for your time, and I hope you have a wonderful day. Tomorrow, let's go kill the market and make some colossal trades.